What's up, everyone? Taiki here, and welcome to the Crypto Market Wizards podcast. Today, I'm joined by Jez. How are you doing today?
Hey, doing well. Thanks for having me on.
Yeah, so I think a lot of people know who you are, but for those that don't, can you give a brief history on how you got into crypto and what you do now?
Yeah, happy to. I think in the context of the article that I wrote, I think it might be helpful to start my history with gaming because that's sort of where all of this has started. Um, I used to be a massive gamer. There was a game called Team Fortress 2 that I had sort of like hit semi-competitive heights at. And while I was playing this game somewhat competitively, Valve, before they went into their publisher arc, released an update called the Loot Box Update, which essentially introduced loot boxes to Western audiences. These were crates that you got through playing, and then you could buy keys with money. Those keys could open the crates. You could get rare items. These items were rare enough and desired enough that people actually started spending real dollars um, to buy them and equip them as cosmetics. This was like 2008, 2009, so very early. I remember somebody bought a hat for $3,000, and all of the forum boards were like, "Oh my gosh! Like, wow, what a sale!" And I quickly stopped playing the actual game, and I just started trading. Like I was in high school, I would just stay up until 3 a.m. I was a day trader. I wanted to clear my inventory before I went to bed at 3 a.m. And so I would just flip these things. And I remember I flipped like maybe like a $50 like gift card, credit card that you could swipe onto the thing into a few $1,000s. And I had this, I think that was a very lucky experience for me, not only because it was profitable, but at that age, having that experience and being able to look at it and say, excuse me, oh, like I stopped playing the actual game and I was clearly more interested in the market making and the trading of it. Like that says something about me. Anyway, so I got interested in options. I started trading options because we were market making. I was reading Wall Street Bets. I started trading options. It sort of provided the volatility that I was looking for. But one difficult thing with trading options was 30-day pre-clearances. Very difficult to trade options if you have to hold them for 30 days. You can't adjust at all. And so that sort of drove me to look for alternative, asset classes that I could participate in without restrictions. And that landed me on crypto right around the time that the Eve on, not the Eve Online, that landed me on crypto right around the time that the DAO hack happened. And so I started reading about crypto and I was reading about this DAO hack. And if you've ever read Eve Online, historical battle postmortems, there are a bunch of these across the internet, usually on 4chan or whatever, but it's somebody who's taken the time to find the sides and do a postmortem of these were the spies and these were the nuance or whatever of this political battle, and here's how it went down. When you read the Dow hack article, it read very similarly to an Eve Online political battle, and I was like, oh, that's a game. People are clearly playing this game and having a lot of fun. I want to go see what that game is about. In 2022, I joined Standard as a partner. That was one of the best experiences. I've learned so much from Alok and Adam. Uh, Probably the highest profile deal that I led that you would know is Blast. Tiation is an amazing entrepreneur. Um, and then earlier this year, uh, sort of saw the tides shifting, and there were a couple of experiences that sort of informed this decision, but decided that I could have more impact as a high value angel advisor in the space. Versus being sort of restricted to larger VC checks. It changes the shape of what you can participate in.
Got it. Okay, so I guess you joined crypto full time 2022, like during the bear market. So hopefully you're able to like preserve capital and just size in and play like some high conviction trades. Yeah. So recently you had this piece that went pretty viral, and it kind of goes over, I guess, your journey, how to, I guess, master how to win in crypto, a starter guide to the crypto MMO. And you kind of talk about a few important takeaways here. Can you just briefly talk about a high level, like the main ways to be successful in crypto, and then we can kind of dive deeper after you touch on the higher level points.
Yeah, so I think the order in which I presented my article is pretty important. I think to people, let's say you're just completely starting from scratch. You're coming in with, your bankroll, which is essentially your level in this analogy. and you don't know anybody. Um, I think far and away the most important thing is to find your people. Uh, when I actually made a tweet about this while I was writing the article, but when I look back, I was in this space. I entered this space essentially with all of my capital by early 2018, mid 2019. My timing was not that great on my first entry. I spent the first 3 years, 2 to 3 years, essentially as a solo player. I thought, hey, I've got a good education, I've got all this TradFi experience, I've got computer background, I understand how these things work better than most. I can be successful. It did for the largely did not work out for me, and it actually took exposure from people who I trusted for me to realize where I was going wrong. One of the most pivotal things that I had was a very good friend of mine, still is, um, walked me through stable swap AMMs. I think this was late 2019. Curve had probably just come out. Because my whole thing was, I was ex TradFi. I hated AMMs because I'm like, oh, short gamma and permanent loss. These things are just, I'd missed the forest for the trees in terms of incentivization and not needing to get like market maker listings. I just, emissions, like impermanent loss. And then this guy was helpful enough to walk me through stable swaps. And hey, there's all these different stable coins going around, and you don't take any impermanent loss when you either LP them or when you trade through them. And that was one of the first times that a lot of this stuff started to click. Um, and it took an external voice. You know what I mean? Maybe I would have come up with that discovery, but it might have taken me another year and a half. And so the number one thing is group up. The number two thing, I think, in presentation order is find what you're good at, find your edge, and try to stick to that. I've found most of my gains have come from what I've identified as my edge, good new thing hunting. And I found that most of my losses have come when I've strayed away from that edge, specifically, trying to leverage trade. Finally, is I would say the third takeaway that I want someone who's just starting out to understand is that as you progress in this game, you need to change your style. I've watched too many people sort of like climb out of the trenches only to fall back in by repeating the same style. And what you have to understand is the trenches style is a very high risk, high reward game. And that, playing it until you make it out. But once you've made it out, I don't think there's any reason to take a lot of those trade offs going forward.
Got it. Yeah. So one thing you said is finding your edge, and I think if you're newer to crypto, I think you kind of have to experiment here or there and see what you're good at. You talk about traders, trench warriors, good new thing hunter, and I guess leverage trading or just like meme lords. You
Yep.
mentioned you're good at good new things, a good new thing hunter. Can you go over like like an example of finding a good new thing that the market didn't see, and
Okay.
walk
Well,
through your process there?
I'm going to avoid the obvious, which was, Hyperliquid, which had a
Yeah.
fairly long and surprisingly faded farming period. During, especially the spot ecosystem was just completely slept on, in my opinion. Um, I think perhaps a cleaner example of a good new thing would be Rollbit in 2023. Um, Setting the picture for 2023, Rollbit being a good new thing. We had just basically like entered a bear market. FTX had blown up end of 2022. Oftentimes, what happens when you enter bear markets and periods of compressed volatility is people search for higher synthetic volatility. That was, like, for example, 100x leverage was invented in 2018 bear, or one of those bears by BitMEX. Just when volatility compresses, people take more leverage. Going into 2023 bear, there was a new perp exchange, which, if people, it really started to get discovered December 2022. Rollbit implemented their perps exchange with very, very high leverage, 1000x leverage, and a really strong innovation, actually, the asymmetric fee P&L. So you have this good new thing. It's a good new trading exchange. If you played on Rollbit, back in those early days, before everyone really realized how predatory some of the asymmetric fee P&L was, and before some of the trust concerns over Rollbit were amplified, it was a good new thing. It allowed for new sort of new directional views, much higher leverage directional views. It felt amazing in terms of like zero slippage entry. Uh, And specifically, I sort of bring out a checklist. It had some other benefits. It was very high friction. So it was at the time in a very small liquidity pool on Solana, and Solana was not, attractive in early 2023, and so that was a huge barrier to entry. I remember when I was going around and I was showing people the Perps platform, and I was explaining the thesis. So many times people would be like, "Oh, that's cool," but like I'm just can't be asked to it was too
Yeah.
high friction for them to figure. Back in the day, you had to do the advanced wormhole portal, and then you just ended up on Sol, and people weren't as familiar with Jupe and the whole ecosystem. So it was fairly high friction. Um, and so that sort of thing allows for your entry to be correct. And then the third thing is there a flywheel? Is there a reason why this thing is going to like gain more exposure in the future? In this case, it was just obviously pretty much a good product, a good exchange. It was clear that people would probably end up trading on it more. And so that was, I think, a very clean example. Rollbit like 2 cents to 20 cents of here's a good new thing. It's worth 50 million on Solana right now. This is exchange that's competing with the best of them. It should be worth more, and taking an entry. There's one thing that I didn't put in this list because I thought it was kind of too advanced of a topic for the article that I was writing. But I think for the purpose of this interview, I'd actually really like to go through it. And it's intuition. Specifically, it's founder intuition. It's what does the protocol founder want here, and then an addendum is, do they have the levers to make that happen? And I'll use two examples. Both I'll use Robit and I'll use Hyperliquid as sort of examples of reading through founder intuition, or at least how I played it. Robit 2023, you had this thing where they had this massively profitable casino. How profitable, how the statistics, that's debatable, but it's undeniable that people were depositing money in Robit, losing it on the Perps platform. I was losing money on the Perps platform and losing it cross selling into the gambling. Um, what does Rollbit want? Like put yourself in the Rollbit founder shoes. They're sitting on a golden goose, right? They've just got this cash flow god. It's just bring it free money. Will it exist in 10 years? I don't know. That's a pretty open question, right? Like one of my biggest fears while I was holding that position was you're just terrified of every day waking up to a DOJ like this domain has been seized logo.
Yeah.
Um, Will it last 10 years? I don't know. Can they sell equity in it traditionally? No, you can't sell traditional casino equity because of the risk of it imploding. People just, there's no secondary market for that. But they already had a live token trading on Solana. And it was trading at 50 million when they were clearly making, it was, I think at the time we started it, they were making like 300 or 400 million a year. And it's like, okay, well, if they do anything, then they can increase the price of this token. And if you put yourself in the founder's shoes, okay, you're the founder of Rollbit. You want to make the most money possible, which is generally, outside of like people like Jeff, generally a pretty good framing of founder intuition. I want to make the most money. How do the founders of Rollbit make the most money? In that case, it's clear they get the market to price their token as equity, and then they sell out their equity so they can capture 5-10 years of cash flow through the equity valuation. And now they've essentially ran it for another 10 years. And so all of the product sprint of buy and burn, move to Ethereum, buy and burn, all these things coming out was to me, I was like, okay, they want the token to go up so that they can sell it, so they can realize the equity in their golden goose. Founder intuition was that play. Uh, let's take another example of Hyperliquid. Jeff puts out launches spot ecosystem, and he puts out for the first 2 weeks with no information. It was just, here's I think it launched at like 8 cents. It traded 8 cents for 4 or 5 days. That was when I built most of my position. Founder intuition. Here's Jeff. He's a very sharp, he's a very thoughtful guy. What is he doing launching a random spot meme coin? Clearly this has intention behind it. And if you take one step back, you're like, okay, how does Hyperliquid onboard users? Hyperliquid is a closed ecosystem, right? Users have to bridge over there and create an account to become onboarded. And then once they've got you onboarded, now you're hopefully a valuable user. And when they look at their own history, when I look at my history, I onboarded onto Hyperliquid because of differentiated assets that Hyperliquid had that I couldn't trade anywhere else. This was November 23. I wanted to short Friend Tech. Um, Hyperliquid friend. That was a good. Yeah.
That's a good
Happy to
one.
go over.
That's a good one.
I think I nailed the friend tech in terms of like finding the PMF on its run up, and then realizing where that sort of PMF didn't extend. Um, but so that was when I onboarded onto them, and so you're like, okay, well, clearly the best way for them to create differentiated assets is to create native assets. And so if you viewed per as, and I don't think it ever really worked in the way that, like, if you had told me when I bought per at 8 cents that it would get spot points and it would get all of these like tailwinds, I would have
Yeah.
said it would have traded 60 cents before the launch, and then that never quite happened. But it was essentially, okay, here he is launching a spot asset. This spot asset going up is the best thing for Hyperliquid. It creates FOMO to sign up for Hyperliquid to buy an asset that you can't buy anywhere else. It creates wealth effect. Jeff wants this token to go up, so I will buy it. Does that make sense? It's founder
Yeah,
intuition.
yeah.
Do they want it to happen, and do they have the levers in which Rollbit and Hyperliquid both had the levers to make it happen?
Yeah, and this is one thing I also learned through the years. You kind of want to long tokens where where like the team is also incentivized to pump it as well. I learned a hard lesson by longing DeFi coins in like the past year and a half, where yes, I mean the fundamentals might be great, but the team, because they're getting sued or because they're worried about regulatory things, like they're not going to pump the token. Whereas
Or
for things
because
like
they're so
Rollbit,
rich?
that too, right?
That's a
They've
very
already made
common.
it.
Yeah.
Yeah, I guess you also want to look for founders that haven't made it yet. So their path to make it is by pumping the token. So in the case of Rollbit, I mean, yeah, like the team wants to pump the token. And when Per first launched on Hyperliquid, I was kind of confused. I'm like, what is this cat coin? And I kind of faded it. I think I sold fairly early, but I guess looking back, it's like, yeah, like they were incentivized to bring more attention to it. Therefore, it makes sense for you to long it, even if you don't have like perfect information. And given your style is good new thing hunting, right? It sounds like you want to look for gems before their consensus.
Mhm.
One question I had from the audience is, given your style, like one bad thing about being contrarian or fairly contrarian is the market will disagree with you for short or medium term, right? You might be holding a bag that's like just going sideways or underperforming. How do you, I guess, first of all, deal with that? And the second, when do you decide that, okay, like the market will never care about this, let me cut my bags? So can you like talk about your mentality there?
Yeah. So I think part of that is why it's so important to have high conviction. Um, Without high conviction, and this is why I can't, I'm not a meme trader. I've been in position to be, many times I've had amazing positions to hold memes. I had 8% of Bitcoin, I had 2% of Goat. Um, but I don't really have conviction in those things. I can't see the founder's intuition. I can't read through how they're going to behave. I can't rely on sort of more fundamental tailwinds, so to say. And so when those things go down 10, 20%, I'm just like a normie, right? I get shaken out. And that's happened to me sort of over and over to the point where it's hard for me to actually buy meme coins now because I know I'm not going to really be able to I've seen too many death coasters, right? I've seen too many death coaster charts. So when a chart starts going down, I'm like, oh, okay, that's it. And
Yeah.
then it goes, 10x higher. Um, so I think part of it is having high conviction and ultimately being right. We don't really talk about the people that had high conviction in the wrong coins. Um, when it comes to looking for validation or invalidation, I think it can be very helpful to have. I mean, and that's basically where your thesis comes in, right? If you're not, if you don't have a thesis on where the flows are going to come from, who's essentially going to buy it from you, um, I dislike plays without knowing basically who I'm trading into, because hoping that the next here's a good framing. I dislike uh, I dislike plays where I'm hoping for a next wave of adoption, if that makes sense, because I think
Mhm.
anticipating and counting on that next wave of adoption is always overpriced in the short term, and I think that's how you can get wrecked. And so
Yeah.
when you're holding something, there should be a thesis. So for example, Rollbit thesis was The devs are going to make nods towards this token to make it more liquid, more tradable, more attractive. And when that happens, I will start selling. The Hyperliquid thesis was this is an unloved spot ecosystem right now. There's about to be a multi-billion-dollar airdrop into the ecosystem. When that liquidity improves, I will, take profits. Um, and so Per was essentially, by the market, sort of invalidated for maybe 3 or 4 months while I was holding it from April to November. Traded from 15 cents back down to 10 cents, or 20 cents back down to 15 cents. Um, but that was acceptable invalidation because my thesis was still on track. I was playing towards the catalyst of the TGE. I was playing towards all these tailwinds. Nothing about that had changed. I think one thing to consider was, let's say the TGE hadn't gone super great and Per was still trading flat or downish and I was still holding it. At that point, I think you have to start asking yourself, okay, what's the thesis here? What are you holding for? What's your validation and invalidation? It's a long-winded way of saying it, but set up your thesis such that your validation invalidation isn't necessarily driven by like pure charts, but is more driven. One previous validation invalidation I used to have was I'll sell when it gets on CNBC, and that's actually like in terms of like decently timed signals. As soon as a ticker that you know of ends up on CNBC, it's not a terrible time to take profit.
Hey, Taiki here. If you're enjoying the content, please like and subscribe. I don't run YouTube ads or have sponsors on this channel, so I'd really appreciate it. Your engagement will help this video reach more people, which will allow me to book better guests in the future. Now back to the episode. So I guess, I know you as a guy that just puts massive size on high conviction bets, and I'll talk about round tripping and all that but before I get into that, I want to talk about sizing. So David asked this question around, how do you think about sizing, right? There's also this question around the Kelly criterion. I don't know if you're going to touch on the Kelly, but I guess, how do you think about sizing? Do you just size based on conviction? Do you only take high conviction trades, aka just like, do you only size up on big trades? Can you just briefly talk about, how you think about sizing up?
Yeah, I think this is also partially where it goes back to like finding your edge. I know people that are terrified of any drawdown at all. And so like stable firming and a equity chart that is a consistent lineup is their preferred style. Since I started, my preferred style my preferred and best style has been all in spot. That's, that's essentially what I used to be all in Amazon. When I first came into crypto, I went all in the wrong spot shitcoin, which was an amazing lesson. Then I went in all in uni. Then I essentially went all in. My experience has been a bunch of all in ports, essentially.
Hmm.
And so part of that is just my natural trading style. That's a place that I feel very comfortable in, where I have deep conviction in a thesis. I put I throw all of my capital at my best idea. Why would I want capital at my second best idea if it's going to make less money? And just sit in it and wait until the thesis validates. And I've been fairly fortunate enough that most of my all in spot high conviction plays have had validation rather than invalidation. That's just survivor bias. Um, I think a lot of it comes down to liquidity. So, and that's part of what I was getting at with the leveling. So, depending on what you're trading, let's say you're trading a good new thing, which I like to define as something that's already been somewhat validated by the market, trading at 20 to 50. It can be dangerous to be early. Like being too early can be dangerous just because um, it's early adopters. I don't even, I, I'm struggling to find the right
It's,
words
it's
to
like
put
being
it.
early is the same as being wrong, right? Being
Yeah,
too early is the same as
yeah,
being wrong.
that's a great way to say it. Being too early is the same as being wrong, and so early is a dangerous place. And so looking at things that trade, 50 to a billion, at that sizing, you can all in a six-figure portfolio. You know what I mean? You're going to end up being zero point 0.1 bips, 50 bips of the supply, a totally manageable portion. And you don't really have to worry about being too big, usually in a position like that. Once you're in seven, all of a sudden, very often you can end up being too big. So, for example, when I ported Rollbit, um, I built a $1.2 million position against an 800K Solana liquidity pool. Like I bought out the liquidity pool essentially. And that was just one where if I was wrong, there was very little crawling out of that one. Um, but I had conviction in my thesis. And so I think a lot of it comes down to, you know, what's your conviction level? What's the risk return on the trade? If your conviction level is high and the risk return is better than other things that you see, my style has always been, why would you put capital at your second best idea when they could just all be at your best idea?
Yeah. No, but I guess that also fits your personality, right? Like you don't care too much. I mean, of course you care, but you're not really phased by the volatility, right? Whereas
Yep.
someone else might be like, "Oh, I'm down 10%. I feel like I'm gonna kill myself."
Yep.
So I think that's where you and I are pretty similar. I'm also, I also lean towards all-in trades. I don't full port my port. I'm more, I lean like okay, maybe 50 to 70%, right? If I have the highest conviction idea. One really memorable moment that I had with you was I think sometime last year or 2023. I think we were hanging out in New York, and we were just like hanging out, like we were just like having fun and whatnot. And I was like, okay, like this is Jez. And then someone like walks up to me and he's like, oh yeah, like Jez just round tripped like his entire portfolio. And I'm like, but I couldn't tell because you were just like smiling and talking. So there's so I mean, you said that you've like blown up a few times, maybe because you full port things, but like, what is
Well,
your
no,
mindset?
actually,
Like, like,
I think that's actually well. So I full port with leverage, or I end up full porting with leverage through martingaling, and that has been a just crippling. That set me back so far in terms of capital compounding.
yeah.
But
Can you talk about that? Can you like explain like if you're comfortable, like
yeah, yeah,
like a
yeah.
spot where you just like you kept martingaling?
I mean, I'll say March this year. I'd taken profits on the Rollbit trade. Everything was at ATH's. I was at ATH. I went and I played a home game of poker. I got quite unlucky. I ran kings into aces and queens into kings. Uh, I lost like 30K, a totally manageable size. I went home tilted, and because sometimes I have a bad way of thinking, I was like, all right, well, I'll just let's make let's make going to that poker a good thing, and I'll leverage trade and I'll make some money so that I'm net up. And I started. I think ETH had topped at 4K, and it was like 3.7K, and I was like, all right, I'll long some Ethereum. I loaded up like a 300K account, and I longed Ethereum. And I woke up and it was either liquidated or close to, and I added 600, 1.2, two, yeah, and you see how that goes. And so, one thing that I'd like to draw a contrast to is the full port convictions have been enormously profitable for me. The things that I die in are these just, very low edge kind of coin flips. Like, I'll sit for 8 months waiting for my thesis to validate, and then I'll spend the same amount of capital on like, oh, I think ETH is going to go up today. And so I think part of that was, stick to your edge. I think if I have one takeaway going forward is going to be, really try not to tilt off this time.
Yeah, yeah. Tilting is the worst, right? And can you just like talk about how you bounce back from just like martingaling and like you know quote
Yeah,
unquote blowing up? So
yeah.
how do you
So
like
so
bounce back from it? And how many times have you blown up or quote
yeah.
unquote
So
blown up?
I've crypto blown up. I think 4 or 5 times now. I define a blow up as a 85%, 90% drawdown. Um, some of my blow ups have taken me. Uh, I'll get okay. I'm gonna say this. You guys might want to cut this out. Like I don't know how this one is a funny anecdote. It's not that helpful probably for the users. But the second the not the last time I blew up, which was this year in March, but the previous time I blew up, which was last year in April. Um, I was just wrong on leverage, martingaling, blew up my portfolio. Had I think I had like 2K USDC on chain. But I was fortunate enough. You know, I at that time I didn't really have much off chain either. I was fortunate enough to have a bunch of NFTs that had loans on them, but the loans were over collateralized. And so I took a glyph that I had, which was market value like 175 ETH. I had borrowed 100 ETH against it. I went to a friend. There's actually a NFT Confessions or something like NFT Ethics, I think, made a tweet about this. I'll link it. It's quite interesting. But I went to a friend, a very trusted friend. I said, hey, I need to, you know, I'm going to do, I explained what I was going to do. I borrowed 100 ETH from them. I got the glyph back. I put the glyph back up on loan. I took the highest offer that anyone would give me, which was actually, excuse me, Hemba at 171 ETH. Very generous. Thank you, Hemba. And so then took the 171 ETH, went to pay back my friend with the 100 ETH, and then essentially had 70 ETH to play with as a new sort of like starting out. That was, you know, I had, I think, 3 or 4 million before that, restarting at 70 ETH. So it's not quite a zero, but it's a very different scale. This one's less useful for the users because I got quite lucky with this one. I essentially was just okay. What do you do then? Sitting there with 70 ETH. What I do is I have very little life. I sit at my computer for 16 hours a day, and I just am constantly online waiting for something that fits my criteria for a good new thing to emerge. And as soon as it does, I play around with it a little bit to make sure that, you know, you don't want to be desperate. You don't want to full port things that aren't deserving of a full port. So make sure that you're not lowering your standards just because you're in a worse situation. But wait around a little bit, play, and then just full port. And so in that case, I got fortunate enough that Pepe actually came out about 3 or 4 days after that blow up happened. And so I was able to full port into Pepe, you know, under 50 million market cap, sit there for 2 weeks while like just bang the table that like this is the first meme coin we've seen like this in a while. And then take profits on that one.
Nice. I love how earlier in the pod you're like, yeah, like I can't really build conviction in, in meme coins, and then after you blow up, and then you have 70, you're like, all right, Pepe is the one.
Well, no, but I want to point out Pepe was very different from a lot of the meme coins right now because Pepe was the first and only. Pepe had no like attention competition outside of the old incumbents of Doge, Shiba, Floki. It was
Right.
like an entirely new on-chain, you know, for that time period.
Got it. Yeah, I
And
guess
that's
like a
kind of what it gets
commonality
to.
here.
It's almost more of a first mover than it is a meme coin.
Interesting. Yeah. So I guess like a common trend that I notice with people I interview is that like a lot of people like blow up at least once, but they have this innate belief in themselves that they can do it again. Maybe because they've done it before, right? So I guess if you've done it before and you blow up, then you know it's possible. So you're able to just
Yeah.
go back.
The I want to say, okay, the first time is hard because, you know, there's this feeling of, hey, I'm decent at this stuff and now I have nothing to show for it. The second time is I found the second time was the hardest because it's like I've done it again. Like, oh my gosh, I did it again. For me, the third, fourth, fifth times, I'm not going to say that they're not hard, you know, tough phone calls to friends helping me out. But at the same time, there is exactly that confidence of I've done this before, I can do it again, I know what to look for. And so, for example, on this one, I had blown up in March, April, and you know, as the previous times, sat there waiting for a good new opportunity to come out. And I think 2 weeks after I blew up, Jeff launched Per. And that was just very obvious to me. I was already very bullish on Hyperliquid. Here was a good new thing that had it just, you know, perfectly checked all the boxes.
Yeah. But I guess, I guess when you were gaming, right? You were like eternally online flipping I guess like loot, and it's really similar, right? Crypto is kind of like an MMORPG because there's always new games to play, and it's up to you, the market participant, to determine if this thing is a new good thing. And the hardest pumps always happen in like a good new thing. What do you think about the current AI meta? I think that's kind of been capturing all the attention. There was like this question around like how big these things can get. Do you have like a little framework on like if these things can keep going higher, or yeah, can you just give your general thoughts?
I think Part of my thoughts on the AI meta need to be contextualized with bias, which is that I've sort of missed out on a lot of the AI meta. I had bought 2% of GOAT at like 8 or 10 million market cap. A friend had just sent into a group chat, hey, brief headline of it. I was so excited about it that I was out in Japan. I remember I immediately texted like 3 or 4 close friends, like, hey, you up? Like, had them fire 10K clips at it as I was running back to my hotel to buy more. Um, when I look back at my private investing, at my liquids, I notice a trend. I notice a trend of extreme FDV sensitivity in things like that look like DeFi, in things that look like maybe layers, and things that look like things that crypto knows how to value. I have pretty strong FDV sensitivity there. I found through anecdotal evidence that on the two AI deals that I did, I had no FDV sensitivity. Like, oh sure, how many 100 million? Like, wave it in. Like, I'll do that round. And it's because it's against the backdrop of Sam Altman spending 7 trillion on a semiconductor factory, investing 80 billion into like internal AI tools. There's just such a capital spend on the AI side that I think people don't really know how to value these things. And that is what allows for sort of the dream to still be alive. It's very hard for us to get like an AMM on an L2 above, say, 50 million at this point because everybody knows what that game is. Maybe cut that out because I am a seed investor in an AMM on an L2 and I don't want to accidentally neg them. But um, everybody everybody knows what how the game is played with a lot of these other constructs. With AI, it's a new playing field, which allows people to dream a lot higher. And so that's something that I've learned, and I think is supporting a lot of this backdrop. When I look at how people are actually interacting with these things, um, to me, what how this current like crypto XAI Twitter meta is it's replacing like shitcoin shot callers, which always played like a crucial role in the market. I'm talking about guys like it's not Lil Moon Lambo, but it's like the equivalence of they played they were obviously in it for their selfish own reasons, but they played a sort of a crucial market uh, uh, role in gathering and coordinating attention. Like even people who disliked what they did would appreciate the pumps that would come after it because you could just trade around these things. People essentially like even if you know that this guy isn't good, everyone wants somebody to just coordinate the attention. And what these AI Twitter things have done is essentially, I think, abstract that, take away sort of the middleman who could have, a lot of like insider or backroom deals and self enrichment. And they've just sort of created these like robotic megaphones that everyone is currently primed to pay attention to, which has like a feedback loop of like, okay, well, as long as everyone's paying attention to that, what it says is important and is tradable then. Um, One thing that I think that's really important to contextualize in crypto metas is for a meta to work, people have to be figuring out a way to make money. Like we're all playing a game, and the core game here is speculation and trying to make money. So then you look at like, okay, how are people interacting with these AI bots? It's replying underneath it to try to seed the AI bot with their shitcoin. It's trading off of the things that they're calling. It's buying access to what they're going to call so that you can maybe front run their calling. It's all these little metas around the coordination of the AI's shilling that have like sprung up and allowed people to find a way to participate in this narrative in like a plus EV way. I think people need to contextualize maybe the wealth that some of these founders are getting for the amount of substance they're putting out and ask themselves, does that make the founder more or less motivated to keep working on this project going forward?
No, I definitely agree. I think majority of these agents are pure slop, but there's going to be a few that's going to be in the billions. And I think one commonality of, I guess, crypto markets after playing all these games is that new metas are basically like being early as a service, right? Everyone
Mm-hmm.
wants to feel early. So whenever something new emerges and people have the dream of, oh, like what if this thing pulls like this DeFi boom? Oh, like the current market cap is 15, it's going to go to 200. Holy shit, I'm so early. Time to buy all these things, right? So it's literally being early as a service. And I guess people want to be told what to do, right? That's why people watch these videos or like they follow Twitter callers or YouTube callers. And I guess these AIs like redirecting attention, right? So, oh, like the AI said it's good, therefore it must be good.
I think
So,
the best thing that the AI meta has right now is the ability to continue dreaming on valuation. I
mm,
think it's very hard to buy a DeFi coin at 400 million or at a billion and expect 100x. We
yeah,
know what the market is, but the AI is just, it could be anything, and so there's nothing really tethering stuff. I think that's the real value unlock there.
yeah, it's
The dream is alive.
dreaming as a
It's
service.
the one corner where the dream, in crypto, very often we sell dreams. I made that post where, I cried in 2021 when I fumbled my uni because I had this dream of staking uni and rent seeking the global financial system. And I was just, that was my retirement plan. And I had I'd wanted to accumulate 100,000 uni. I had it once, I fumbled it and I cried because I was like, well, that was my chance, and now it's gone. And obviously that dream was incorrect, but the point is that I had that dream, and I don't think that that dream exists for a lot of DeFi anymore. I don't think that that dream exists for a lot of like dog meme coins, but I do think that that dream exists with AI.
Yeah. So, you mentioned before, I guess this is a post from December 15th, that right now maybe you don't see any high conviction ideas, so you're mostly stabled up. Um, do you think that there's any interesting plays happening in AI, or are you just still kind of,
Lots of
just
interesting
testing
plays
the
in
water?
AI. I'm just, I'm not. I think a lot. Part of it is bias from missing goat. Part of it is bias from, you know, maybe knowing. It's not that I know too much about AI, but I probably know more than the average. You saw that a lot with NFTs. Was, very strong visual programming artists were missed out on a lot of NFTs because to them it was slop. It was like, these are tutorials. These are slop. Why would you spend 5 figures on a tutorial? I don't understand this market. Um, and so sometimes it's maybe like sing a little bit too much of the sausage. I think one way to frame where we are is a bit of a transitory period. I think we're maybe moving away from a period where traditional infrastructure was valued very, very highly, and we're more moving towards a period where some of the apps themselves, like Hyperliquid, are valued very highly. In that cross section, I don't see a lot of opportunities that make me excited to deploy capital at valuations. I think one thing to contextualize is, in my opinion, this is a very reflexive cycle.
Mhm.
Um, this AI trend is actually the first thing that people can really sink their teeth into. Before this, I would say we haven't had any innovations this cycle, outside of the price going up,
Yeah.
which is always the most important fundamental. But in prior cycles, you had a lot more, I would say, quote unquote, real innovations, whether it's stable coins or DeFi or new token types. I think this cycle has been a lot more about you know price going up, especially Bitcoin price going up, and then the narratives that come around with that. Um, what makes me more concerned is I wonder then who is the buyer of last resort in this cycle.
Mhm. Yeah, I guess when you're buying any coin, right? If you're buying or if you're buying Rollbit at 50, then you're envisioning a world where someone's going to buy it at 500 million because of the PE ratios. Whereas if you're buying like some like DeFi token, it's like, who the fuck's going to buy it at 3x? If you're buying this AI coin, right? Who's like the marginal buyer? And I guess like that's kind of always a question you have to ask yourself. If you're buying this token at X valuation, well, you have to envision a world where someone's gonna happily buy it from you like at 10x the valuation.
Yep.
And if you can't
And one
name that marginal buyer, then you probably shouldn't long that coin.
and that's kind of coming back to that prior point that I made, that I never really feel that comfortable waiting for the next wave of adoption. I always want, like, okay, this clearly has a bunch of friction, and when that friction reduces, this user set is going to come and on board and make flows better. I think just waiting on the general population to uptake it is, in an environment like this, absolutely possibly correct, but I just think historically a dangerous bet.
Yeah, I really liked how you frame that. Hey, like, why would I? Like, the reason you full port is because, like, why would I allocate money to my second best idea? I'd rather just full port into like the best idea, right? So in a way, I think there's this MGNR tweet where it's like, you just pick up the free money 5 times a year. Otherwise, just sit in stables and you'll like
Yep.
outperform.
The hardest part is sitting in stables. The hardest part is sitting on your hands and doing nothing.
Yeah, because I guess you log into Twitter, everyone's like bull posting. You go on Telegram, everyone's saying, "Oh, I made so much money." It's like, "Oh, motherfucker!" Like, but comparison is a thief of joy, right? Comparison is always a thief of joy.
Always.
Yeah. I do want to go back to this article because I think you talked about the leveling guide. So, how does someone make it if they have 4 figs and below, 5 figs and below? Um, can you like just talk about leveling and general tips for someone? Because I always ask someone, right? Or whenever I do this podcast, I tell them, or I ask the guest, like, how does someone make it, right? Because I think the majority of my audience may be sitting at 5 figure or 6 figure portfolios. They want to get it to like 7. Do you have any general advice for how someone can make it for the rest of 2025?
I'll just speak from anecdotal experience of watching
Yeah.
others. I've had a lot of experience in my group chats of whether it's mentoring or just watching sharp people come up. The archetype that I see, and you can sort of just identify it. You see these traits in a person at a 5 or 6 figure portfolio, and you're like, okay, this person is probably going to make it. Is strong hunger, like onlineness, essentially. Are they willing to do the boots on the ground, find the opportunities? Strong resilience. Can they get knocked down and get back up? Can they take small losses? Can they take large losses and keep going? Can they take being wrong and searching to find right? Can they change their mind? People think changing your mind is weakness. No, like changing your bias to new information is very important. Um, it's a mixture of these factors, and it's essentially a combination of risk appetite, hungriness, and onlineness. And once you combine those three, um, I think the path gets, I would say, more defined, not necessarily easier. One thing I would just say is, uh, you know, for almost all of the levels, I would always recommend having a job. As counterintuitive as that sounds, because a job can stop you from sort of like being perpetually online, a job can stop you from seeing new opportunities, but a job can also, one, just be a fantastic APR farm, depending on what your net worth
Hmm.
is. Um,
Yeah.
and really, like, consider that. What are you doing? Spend 8 hours a day. If you can make 200% a year trading, would you take that trade? And if that trade was you trading, you know what I mean? Like, a lot of times if
Yeah.
you ask people, if you 3x your portfolio, like, would you trade? Like, would you be a trader? And they're like, yeah. And you're like, okay, well, just go work. And it's the same. But but working's less fun. But the other thing that it makes you do is it makes, I think sometimes sitting on your hands and doing nothing while there is no good new thing and not forcing a good new thing is really important. And I think what a job can do is it can give you the patience, the runway, the external setting to be comfortable doing that. Whereas I would imagine if you don't have an extra income source and this is your full time, there's a much higher level of pressure of I have to find something, every day, every week, every month, or whatever it may be, even if good enough opportunities aren't coming
Got
up.
it. Yeah.
Once, okay, that's outside of the job. Let's say your 5 or 6 portfolios, you match the traits that I described as desirable, and you want to go up. I have almost always witnessed people exit those levels with full ports with conviction. I think one issue with a diversified portfolio is it requires you to be right a lot more. Like if you've
Mm.
put 20, if you split your portfolio, into 5 bets, of course it allows you to be wrong more too. But we're traders.
Yeah.
Let's
Yeah.
hope to assume that we're going to be right. How do we make the most when we're right? You make the most from your best ideas. You make the most from your best ideas if you put all your capital into them. I just think that in this world where, okay, let's say you're wrong on a spot high conviction play. Like, what's your drawdown? 50%, maybe. Like let's say you're just like catastrophically wrong over the period of like a year and you bought it at a bad time. You're probably down like 60%. So like a 60% loss. What's your upside? It's like, 10x, 100x, like much higher than these losses. And so part of my point is that it's not the end of the world when you're wrong on a full port high conviction spot. It can be the end of the world depending on how long you sat in it, if you like had real opportunity cost. But just the asymmetry of these plays uh, means it really only takes one. You've got to be right once. And I think most people in 6 years can be right once.
Yeah, I guess there's also survivorship bias, right? There's for every Jez, there's like 10 dudes that full ported something and it went to zero. And, but I guess you had a job, right? So if you have a job, then you can full port be wrong, and then maybe 6 months later you just do it again.
Yep. But I think also what I would say is anecdotal evidence of people doing this strategy graduating, whereas other strategies may be either taking longer or working less. We never talk about one thing I'd like to point out is nobody ever talks about profitable options traders. You even talk about profitable leverage traders, but that's a smaller category. Like, who out here is interviewing profitable option buyers, for example? Not a very good instrument. You don't see a lot of like lifetime winners on that.
Yeah, that's interesting. I guess if I think about people that's made it, right, they made it through full porting. I don't really hear people like making it through options trading, right? So therefore
Yeah,
maybe it's
but
not good to
think
trade
about your
options.
timeline. Think about how
Mm.
people made it, and this lines up with my observed anecdotal experience of watching. It's not just like pure selection bias of seeing the top accounts, but I think the way that most people traditionally make it is spot high conviction. And I think mainly because you only have to be right once. If you want to make a career out of leverage trading, you essentially can never be wrong. The danger with leverage trading is it's kind of the inverse. If you're wrong once at a severity with leverage trading, you get wiped out. Whereas you only have to be right once with severity at spot conviction to make it.
Yeah. I guess, I have a poker background, so it's like, whenever there's a good spot, like I really don't mind putting in size. Like I think you kind of fall under the category of like believing in the Kelly criterion. And I'm not going to go over this, but basically TLDR is that, the optimal bet size when you have an edge tends to be a lot bigger than what you would think, right? I think a lot of people, they're like, oh yeah, I'll put 2% of my portfolio into this thing and whatever. But if you actually have an edge, like you should be like putting 50% of your portfolio, right? Like that's like the most optimal strategy. Of course, in crypto, like you can go to zero, right? So, do you have any comment on like Kelly? Do you think it's like
Yeah,
decent
what's
or?
funny is I'd actually made some alts with a friend, and he was Kelly Criterion and I was Martin Gaylord.
Oh, I
So
know this. I know this. I know the Kelly Criterion guy. Yeah,
yeah,
he.
so I would there is an element of Kelly Criterion in it in terms of sizing up with conviction. Um, what I would say I stray from Kelly Criterion is I generally just full size rather than like an elegant like
Yeah, why go for 60% when I can just go 100%?
again, it's just, what is that last 10% getting me in my second best idea? It could get me more in my
Right.
best idea. That's usually how I thought about it.
Yeah. No. No. It's interesting because like, for example, like right now, right as of now, like I have like half my port in Fartcoin because it's like my best idea, and I
Yep.
think that's like pretty egregious. But sometimes I do think that okay, like maybe it's just best to full port. But there's also the element of like okay, like 50%, 100%. There's a marginal difference there because if I'm wrong, then well, it's like if I'm wrong in a DeFi coin, it's like it's fine. If I'm wrong on Fart coin, it's like dude, this guy's a fucking idiot. So, but I guess I
I,
shouldn't worry about. I
I
mean,
want to really, I want to really congratulate you on sort of. It can be very hard to overcome certain labels that the market can put on you because they can kind of be like conditionally self-fulfilling. So for example, if you get labeled as like a top signal, it can actually be very difficult to crawl. It's a self-fulfilling prophecy because this whole market works on attention. If the whole market is like, oh, okay, well, this is the, announced time that we should probably stop paying attention to this, then that can become a self-fulfilling prophecy. So it's very, I think it's very, it can be very difficult to change that once it's become. And I think that you successfully did that with Fartcoin. And the way to do it is you just have to be outstandingly right in conviction on something and just show the whole market. You're like, oh, yeah.
No, it's funny because we just talked about the AI meta, and because so many people have called me a top signal, like there's so much like AI XBT, for example, like thinks of me as a top signal. Like all these AI agents view
I've been
Taiki as a
trained.
top signal. Yeah, they've been trained on like the past 2 months of like its Twitter data, and they all think I'm like a top signal. So there's a chance that if in like 2 months there's like an AI bot that trades, it's just gonna counter trade everything I tweet out, right? So this
Yeah,
type like this element of a self fulfilling prophecy is like very interesting. But I really enjoyed this conversation because I talk to a lot of people. They're never as like aggressive as you, right? They're saying, yeah, like bet big when you think you're right, but like I never hear someone say, hey, yeah, like 100% full port. So I really appreciate your honesty.
it's worked out well for me, but I am survivor bias of putting the right coins.
Right. So I guess you should only full port once you have experience, right? Like if you're coming into crypto for the first time and you full port, then chances are you have zero edge. You need to be able to, I
Yeah.
guess,
And full port once you found edge is probably a good addendum.
right, right. So one of the last questions I'll ask you is, of course, from Samurai here. I guess you kind of talked about point one and three, but do you have any views on Hyperliquid? I know you sold some, but I think everyone associates you with it, so I figured I
One
might
thing I
ask.
also want to point out is the Hyperliquid P&L is a very, you know, it's only since essentially like July, August, of which like I had a good run with being bearish on the ETH ETF, and then I had a good run with the Chop City in October. Historically, I'm not a profitable leverage trader. Like when you look, like when I take a step back and I look at my P&L in each of those buckets, like my good new thing hunting is almost like a direct offset with like leverage losses. Like they're very like positive and negative overall,
Mm.
even if I've been profitable since July. So one, I just want to like, yes, I'm profitable and hyperliquid, but overall I'm not, and I think that's part of where some of my learned experience warning against leverage comes from. Um, Talking about Hyperliquid itself, I mean, it's just clear there's a lot special there. Jeff is a special founder. You don't get a lot of founders with that level of both competency building and competency in domain expertise, market making and exchanges. It's clearly built something special. It's a best in class product. I think when other when other founders ask me what makes Hyperliquid so special, I usually point them to an interaction I had with Jeff back in January of this year. So in January of this year, I had a large at the time, I think Bitcoin OI in January of 1 year ago was like 100 million, 110 million. I had like a 10 million Bitcoin long on, so I was like 10% of the OI. I went the Coin Telegraph or whatever. Like there was some leak. Bitcoin went up a bunch. I went to take profits on the Bitcoin going up. I set one of the ladder scale orders. Instead of setting it from 72K to 72.2K, I set it from 7.2K to 7.22K. And so I
Uh-huh.
essentially market sold 10 million into the book. I like slipped it like 8% or something. I lost a ton of money on that, but it was like I was profitable on the trade, so I didn't care that much. And I tweeted, I was like, hey, I didn't understand how the Oracle system worked. I thought it was on mark, not on like the Oracle price. So I tweeted out like, hey, I'm sorry to anybody I just liquidated. Like I just donated to the HLP book. And Jeff responded, actually, he's like, oh, I'm so sorry this happened. Like, how can we avoid this? And I was like, well, just user error. Like I fat fingered. This is my fault. Nothing changed. And Jeff was like, well, what if, we had like pop-ups that like stopped you from like doing this? And I was like, well, usually I value like latency and execution over safety, as demonstrated by the fact that like, different tools that I use generally are expediency. I'm very latency focused. And Jeff was like, oh, okay, well, you know, we sort of went through it, and it was like, well, what if I'm putting in a limit order 5% away from mid, then give me a pop. He's like, okay, well, what about market orders? Because sometimes those have high slippage too. And I'm like, well, you know, a lot of times if I'm on market, I kind of have an intention to slip. But if I'm on limit, I'm probably not intending to slip that hard. And it's probably more of a mistake. And then the next day, if you went in, like, and it's still up there today, obviously, if you go in and you put a limit order in over like 10% away or 8% away, you get a little pop up, like written in my blood, telling you, you know, are you sure you want to do this? And so to me, it's that interaction where he, you know, is just a random user, like almost meme post on Twitter. He saw someone had an experience, drilled into it, and by the end of like 30 minutes, had a takeaway to improve the exchange, and the next day it was implemented. And you do that
Yeah.
over the course of a year and a half, a couple times a day, up there, like that's how you build a best in class product.
Right, right. And I guess you only figured this out because you decided to tweet it, right? Because you tweeted, you had this interaction, which made you more bullish hype, which maybe allowed you to build more conviction. So, like, maybe that tweet was worth a few $1 million for you, even though at the time you didn't know it, right? So, I think it's like the value of just putting yourself out there, even if people will meme you for just like just like
Yeah.
selling Bitcoin or whatever.
Making my Twitter account back in 2020, 2021 was the best thing I ever did.
Yeah. And I guess, like you said at the very beginning of the episode, finding your group is most important. And the only way to do so is by, I guess, putting yourself out there, mostly on Twitter, right?
Yep.
Can I ask you about the poker hand? I have the hand history of you busting out.
Oh God.
I want to
Oh my.
ask you about, I
I
want to
played
ask you
I
about
played
your,
so well for 4 days, and then I just blew up on a random big blind hand.
no, no,
Like
because
I
I
folded,
saw this hand
you
history.
saw me
Like,
fold jacks to the queens. Like, oh,
no,
okay,
because, okay, okay. So, okay, before I show the hand history, can you just go over like the tournament, poker tournament you entered and like why you entered, etc.?
so I have been a losing cash game poker player for about a year and a half now. It's something that I originally turned to. Actually, I originally turned to it as a distraction from leverage trading. I was like, okay, I'm going to start trying to play more high stakes poker because what's the worst I can like? I have a terrible night of high stakes poker. I lose like 20K. Like I can live with that. Like leverage trading losses are generally much larger. Um, Obviously, it backfired when I ended up tilting off after a poker game. But that was the original idea to get into it. It actually taught me a bunch about weighting, like edge spots, stuff like that. But just as a context, I've been a losing cash game player for a year and a half. But when I have played these very infrequent online CT poker tournaments, I'm in a Telegram group that just every now and then fires off random cheap tournaments. I had cashed every single online little tournament that I had played. And part of that is different sample size. Part of that is just a different play style. When I play cash, I have a VPIP of like 80 or 90%. Like legitimate. I'm the
Yeah.
fish, right? I want to play hands. I want to see flops. I'm playing bingo half the time. I'm trying to bully people. When I played these online tournaments, I was just the nittiest nit, right? Like ace jack and somebody else 3-bet, like I'm out of there. Like it's too much. Slightly joking, but you saw some of that on stream. And so that was sort of my plan. I was like, okay, well, I've cashed every tournament. I just played like turbo net. I had just had the large Hyperliquid win. I was going on vacation to Hawaii. I wanted, I've just been looking for distractions, ways to not like punting off and losing money on a euphoria
Okay.
trade. And I had a friend who was going to Vegas to play in this tournament. He's a professional poker player. He's like, I'm going to go play in this tournament. I was like, oh, that sounds fun. I'd talked about it before. I'd always wanted to do it. I joined him. I played. So it was actually my final table run was the first and basically only tournament I've ever like really played in poker outside of these like CT online runs.
Yeah.
Um, I bought in, and my strategy was essentially everyone else is probably better than me. So I want to play as little post flop as possible. Essentially, like I don't, I if like
You go for high
navigating
variance, right? You
I
go for
want
high
higher.
variance.
Well, yes and no. I actually never got one thing that I'm like. I never got the. It's partially luck, but I never got the money in bad until that final hand. Um, I was just very, very tight. I played like 4 or 5 hands a day. I was, just folding almost everything. I was just trying to win my blinds back on every single button. I had my hoodie on, my sunglasses, and
Yeah,
headphones.
dude.
I said nothing for 4 days straight. I was just like, because anything I say is just gonna like express how bad I am. So I'm just gonna be like, I'm gonna, and it worked. I had such an aura at these tables because I'd played like
Wait,
no
wait, wait.
hands.
Let me screen share this. Look at the aura. Oh my God. So much
No,
aura.
and this was after they handicapped me. So when I actually went into the final table, they said no headphones. So I lost my music, which was my main skill device in not like punting off bad hands and keeping me motivated. They took away my hoodie. So they said your ears have to be shown. So I couldn't wear my hoodie up, which was my safe space. And they actually took away coaches on this one. So I had
Oh,
hired
okay.
after I made the final table, I hired a coach for that night and the morning after, and then he was going to be on my rail and help me out. And they actually banned coaches at this tournament, so we could only talk on breaks. So anyway, they took away a
Uh,
lot of the stuff at the end.
all right,
But
all
yeah, so
right.
that was my point.
All right, so backstory, right? When you're playing cash, you're basically a whale, right? You're just voluntarily playing pot VPIP like 80% of the time. You're the spot, but when in tournaments, you're a nit, as in you're like super tight. You
Perfect.
play like an old man. So with that background, let's talk about this hand history. Which look, I'm in some poker chats, because I
I'm sure I
also
got
was poker pro.
roasted for this.
People were roasting you, so let's talk about this.
Yeah,
So I think hand 38.
yeah.
This guy raises from the hijack to 3.3 million, and you call from big line. Okay, that's fine. Flop comes Jack 8-3 rainbow. You
So
check,
I know I
they
have a
bet.
terrible check raise hand. I know I have a terrible check raise hand. Like I know I don't have the right shape of it. I know my turn bet was bad. I knew this stuff actually as I was doing it. Part of my thinking is these are such unconventional plays that I could just maybe catch him off guard at the end with an ace king. Okay, setting some context. Uh, Actually, when I went back and I watched it, the commentators mentioned this. Zach got such quality hands if you can see the whole cards, but sitting at the table, he was the chip leader and he was playing like 80%, like 70% VPIP.
Yeah, yeah.
And so it felt at the table that he was bullying. And so like that's my wrong head read was he's bullying people. We get to the thing he and you actually one thing that's funny is I check raised with this hand and I actually folded a hand on stream the day before where I flopped top pair because my plan going in it was very similar. It was like I had 9-3 suited of clubs. I flopped top pair 9, but my whole plan was going into this was I'm going to complete my big blind. If I end up with a flush or a flush draw, I'll stay, and I don't want to play any pairs because I don't want to have to like okay I flop a 9 and then a jack comes out on the turn or a king comes out on the river.
Yeah,
How
yeah.
do I deal with this sizing going forward on that? I was just trying to make final table at that point. So I actually folded a top pair 9 with the 9-3 suited to a continuation bet the day before. I was trying to make the final table. Now, having made the final table, I complete my small blind with 10-6. I have the flop comes, I whiff the flop, he leads out. I put him on like ace queen or ace king or like ace 10. If he had ace jack, it was going to be fuck me. I check raised to try to get him off. And when he called, I was like, okay, well, he's calling with 2 overs because you sort of just like have to defend that range. Then I hit the
Right, right.
10 on the turn, and I'm like, okay, I can get value out of 2 overs now. And like nobody would
There's a
expect.
very slim range you're targeting, sir.
Yeah, I know. And I was just running into a set. But again, like
A
I thought he
quads.
well at the time on the turn it was still a set.
Yeah, yeah.
um,
You're-
and I'm hoping that my image has been far and away essentially the tightest at the table. I've never put money in without being good. My check raise the stream before, maybe I indexed too much on my one stream of play because I was like, well, this is the only history that all of these other final tables
right.
will have, and so I sort of kind of tried to inverse a bunch of that. This last time I check raised with King Jack top pair. This time I check raised with fucking Dusk. Um, so there was a bit of like I knew in my hand, okay, I know I want a flush draw, like a gut shot, a backdoor flush draw, or a gut shot in this hand as I'm doing this. But I just had sort of had enough of his bullying, and I wanted to take a stand.
You're
And so,
tilted.
uh, yeah, I mean, I didn't have my music, right? I didn't have my music. I didn't have my hoodie. I was just like, oh, and I think the hand before, or like a couple hands before, I had had to lay down my jacks, which was a good fold against Zach's queens. But I, missed. I was tilted because I knew that that other guy was full, absolutely full of shit. But then when Zach three bet or four bet, I couldn't continue. So I think I was tilted because I had to lay down the jacks. Um, so I know I I've thought about this hand a lot because I've been pretty beat up that like I was like, hey, it was my first tournament. I had this miracle run. I had a really cool story. I played really well up until day four. I even played pretty well through day four until that hand, and then just absolute devastation. Um, I don't entirely hate the way that I've played it out, except for my river call, which was just me being like overwhelmed in the moment and like the river
Yeah.
call was the river call was I was still very unfamiliar with stack sizes. The thing that I had gone over with the coach the most is because I'm coming from cash where you just reload essentially.
Yeah.
Like
Yeah.
I,
Yeah.
I had trouble reading chip counts, and so I actually thought that my river call was a lot less than it ended up being. I thought I was river calling for like 8 million or something versus 17. I didn't take any time to think about it when I had infinite time chips to think about. And I just was like, it was just one where you're just like, you're beat and you're just praying that he's on ace king. And you flick in the call. And in like a cash, it's almost like a bad cash game habit where like in a cash game, you just call that off
Right.
to like reset your stack and buy
Re-
back in. And this, I still had Steiner on my right or whatever at like, I was still covering him even if I'd folded that, that, that hand there. So
yeah. It's
the
okay.
the the thing that I mostly beat me up on is just like an overwhelmed like river call like in the moment. Um, but the rest of the unconventionalness was, I admit, terrible, and I knew it was terrible in the moment. I was just trying to like, okay, this is such an unconventional play, and I'm seen as this very tight player. Like, can I get away with it?
Interesting. Okay. I guess people love to criticize people, but
I mean,
we,
it's
we don't know the
welcome.
meta. We don't know the meta, right? But at least like, I'm not at a place to criticize anyone because you cashed out for like 200K. And look at the aura. You came out and you're not even phased. You're like, yo, I still have millions from my Hyperliquid airdrop. I'm fine.
Yeah, and big thanks to everybody that came out and supported Jandy, Tom, Merp. It was fun having I had a real rail. That was a lot of fun.
Yeah, and that's also part of the benefits of having a group, right? Like once you have a friend group, you can travel together, have fun together, and you just overall enjoy life together. So,
Yep.
anyways,
Oh,
I
I do want to
appreciate.
point out on my
Yeah, yeah, yeah.
on the hand that I died on, I got to bet 420 and 69.
Oh,
My
let
check
me let
raise
me
was
let me check
420.
this.
My check rate go look. My check raise was for
I see
4200, and my turn donk was for 6900.
it. you're you're such a meme lord. That's fantastic. That's fantastic. This is why we love jazz. But
Yep,
yeah, anyways, thank you for the comprehensive hand history analysis. I appreciate it. But
yep,
yeah,
yep.
anyways, thank you for your time, Jazz. You know, everyone that's watching this, we're all trying to make it out here. So, do you have any final words of advice to those that's trying to get to where you're at right now?
I think the main thing is don't give up. It has parallels with the just keep gambling meme, but hopefully you've got edge, and so it's not just shooting in the dark. Um, but there have been many points where I wanted to sort of like stop trading for a while, or even just like after a blow up, after every blow up, you sort of have a few days of reflection of like, is this the right industry for me? Like, am I doing the right thing? Um, and I remember actually DMing a friend after this most recent blow up. I DM'd a friend and um, I offered him a buyout of my liquids. I was basically like, "Hey, I don't know if this is the right industry for me. Like, I can't control myself sometimes. Like, do you want to like buy out my exposure for like 50 cents on the dollar or something, and I'll just go be a ski bum or something?" And he actually responded, "Jez, this is the most bullish thing you've ever texted me. Buy more right now." And this was like, it was at a
Wait,
market
buy
low
more of
too.
what?
No, just general market exposure. He was just like this is the most bullish thing that you've ever texted me. You trying to capitulate out, and I like took a step back and I was like, yeah, okay, like I see that point. Like that's that's probably correct. And so I got back to it. But yeah, I would say don't give up. This market has a way of surprising you with new opportunities.
Yeah. Because like you said, right? I think earlier you said that this cycle has mostly been around number go up and not really about, I guess, innovation. And that's why we had like all the meme coin super cycle and whatnot, which still might happen, but out of nowhere, right? Like Goat came up, like Truth
Yep.
Terminal, and now it's spawned this new meta. So you can't really predict the future. All you have to do is just, or all we can do is just be around, pay attention, and pounce at the right
I
opportunities, right?
react quickly. Yep.
Yeah. And I guess we've both developed all this muscle memory of like when we see something, like we usually tend to know with intuition whether it's going to pump or not, right? And I guess like that you can only develop over time after seeing all these games play out. Um,
Mhm.
and I guess like the hardest part is how to size and when to get out. But it seems like your strategy of full porting on your best idea uh, usually tends to work out. But I guess you shouldn't be full port every time, right? Like or like 365 days a year, you shouldn't be full port, right? You should be cash or full port whenever you find a high conviction
And
idea.
I really want to point out my full ports are not like this is a pretty chart. I think this will go up. My full ports have something external that I can underlie my conviction on, whether it's founder intuition or protocol intuition. Like there's some thesis that has a validation and an invalidation. But
Yeah,
that's my
and I
style. Other people might have styles with a full port on the meme coin where those validations and invalidations are much more directly tied to the price.
right. Yeah, and I guess from a viewer's perspective, you have to figure out what works for you. Like what works for Jez and I probably doesn't work for most of the population. We probably have developed some elements of mental illness that allows us to deal with all these
I
swings.
think with some of the volatility and the conviction, maybe not. But I do think if I had a one true style to preach, I it's probably actually meme coin holding to be honest. But I think that that just kills more people as well.
Yeah, there's always survivorship bias,
Combination of
right?
meme coin halting and good new thing hunting.
Yeah, for every guy that made it in meme coins, there's like 50 people that literally died, and we don't
Yep.
hear about them anymore. All right. Well, thanks, Jazz. Do you have any final words for our audience today?
Um, keep going. You can have fun online.
You can have fun online. Yeah, like I
Long
do with my green
You
dildo.
can have fun online. I'm serious. Look at. I'm not going to say that there's a correlation, but I just want to point out. Look at your performance once you started having fun online versus once you started taking it so seriously.
That
It's like,
Oh my god, that's so true.
yeah,
Dude, ever since I bought this green dildo, my portfolio has been up only.
because
I need to buy more
you're
dildos.
interacting with the market in a more organic way. You're having fun with it,
Right.
and you're doing things that are like you think are fun, which other people find fun too, versus like trying to force something on the market, like trying to force. You're, this is like actually being
Right.
intuitive. So
I didn't even think about it that way. But you're right. No, we should all have fun, right? We should all ship post. And when we ship post, we get more engagement. When we get more engagement, we have a better, I guess, pulse on the markets. We
yep,
have to have fun. We have to
yep.
have fun. Oh, wow. That's a fantastic way to end it. Well, thank you, Jazz. I appreciate the time. And hopefully the audience has enjoyed it too. Thank you
Thanks for
guys for
having me.
watching and see you guys another time. Bye bye. Thanks for watching until the end. If you enjoy the content, please like and subscribe. For additional content, make sure to check out my premium Discord where I post 3 additional videos per week and I share my portfolio in real time. Thank you again for your support, and I'll see you another time. Bye bye.